The S&P 500 making fresh record highs on Monday. Meanwhile, under the market's surface, 68 individual stocks are themselves hitting 52-week highs. Does that mean the rally is on firm footing? Today on Trading Nation, we've got Wald from Oppenheimer and Gina Sanchez from Chantico Global. Gina, I want to start with you. What are your thoughts here on the market?
Well, you know, when you're looking at continued bull market rally, I think there's a few things that you should look for. One is continued multiple expansion. The second is probably continued leadership by growth and growthier names. And the problem with that is that we don't actually see either of those two things happening right now. I mean, the third thing you're probably looking for is continued upward revisions. And in fact, right now you're seeing continued downward revisions. Revisions peaked out around April, and the optimism around earnings going forward into next year is starting to wane. Multiples are starting to also retract, and we've seen a shift in leadership from growth stocks to value stocks for the first time all year. I think that's a canary in the coal mine.
Ari, what are your thoughts here?
I'll take the other side of that. I think what we're seeing in the market and the market action is very healthy. I think it's consistent with middle innings of a bull market, and I think this has a ways to go. First off, what we found is that the more stocks participating in an uptrend tend to be followed by higher forward returns, and that's what's happening. Take, for instance, the participation on the New York Stock Exchange, measured by the stocks above their 200-day moving average. That reading recently ticked to 63%. This is important because over the last 20 years, every major market top coincided with readings below 60%, a drop off in participation. So we haven't seen that, and we ran the numbers, and sure enough, forward returns have been higher looking out the next 3, 6, 12 months when there's more than 60% of stocks above their 200-day versus when you're below it. On top of this, not only are we seeing broadening strength participation, but we're seeing the right markets participating as well. We're encouraged with what we're seeing on the value side. These are some of the more cyclical areas of the market, like financials, like tech, like industrials, high beta in general breaking out to the upside. We see this as a lot of the reflationary tailwinds that first emerged in the fourth quarter of last year, now coming back to the market. We think this helps lift the next leg of the advance.
So Ari, if I just go back to that chart that you were talking about, so you're saying because we're seeing 60%, we're seeing big numbers above the 200-day moving average. That's bullish. It's not a top yet. But when that number starts to go down, that's saying, hey, we've reached a high market level, but not enough stocks got us there. So that's when you should be concerned. Am I understanding the chart right?
That's correct.
Okay.
Towards the market top, what's going to happen is more and more there's going to be some breakdowns underneath the surface. And if you look at the late 1990s, if you look at the peak in October 2007, even if you look at May 2015, ahead of those periods of pretty big downside volatility, the market was making new highs, but less than 60% of the stocks were participating. There were some breakdowns underneath the surface. You're not seeing that right now. Right now, you're seeing these very healthy market rotations. Stocks are participating, maybe at different times, but they're holding support, rallying to new highs, and we think that's very encouraging. We think this is a hallmark of a healthy middle innings bull market and a key reason why we expect it to continue.
Gina, I want to turn to you for a final thought. You heard what Ari had to say. That's some real advanced statistics there, right? When you start looking at this bottoms-up approach, what do you think about that? Are you convinced? Are you going to go start loading up on your portfolio tonight?
Well, I mean, I think I'm still pointing to the shift in market leadership that just happened this past month for the first time all year. But the second is that if you look at why that shift in market leadership may have happened, it could be that investors are focused more on valuation today than they were before. The valuation of the current stock market right now, I think, continues to be its Achilles heel. While I do think that we do have a recovery in play, and that recovery is showing to be global and self-sustainable, we are looking at a market that priced in that plus a lot more. And I think that that's going to be the continued concern around the extent to which this bull market can continue to expand. Because if you're talking about a multi-year bull market expansion, when you've already priced in all of that growth in the first year, where can you go?
Ari, it sounds like Gina's not buying it from you today, but my thanks to both of you for joining us here on Trading Nation and to Those of you who are watching, I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.